What's up, guys? Monday, November 27th, we are back for another Real Estate Weekly warm-up. Super excited to chat with you guys today. Got a lot of cool studies and articles that have come out. And Warren Buffett, for the first time in 40 years, did a public live interview, which he hasn't done in forever. I have a few takeaways from that I'm going to share with you guys here. Super good stuff. So starting off, all good news. Interest rates are stabilizing. They even came down by 1/10. So what we're looking at there is interest rates came from 7.4 down to 7.3%. Obviously not a huge decrease in rate, but it is nice to see that we're stabilizing. What that has done is that has pushed more buyers into the market. Right now, we've seen an increase in mortgage applications by about 3 or 4%. So buyers are continuing to be active, and we're still at about 3.7 months worth of inventory available on the market. So we're still really, really short of that, buyer-seller equality in the market. You need to be at 5 to 6 months in order for us to be there. So what does that mean? It's still a very competitive market. We shouldn't see any major price changes in properties anytime soon. Now, some new studies that came out, some new articles that were written, some things that I really like to see is what's going on with the millennials and Gen Z as they go out and buy properties today. And the reason why we care about those is because they are the biggest either renters or home buyers in this current market right now. If you didn't know this, the average or the median home price right now is basically $420,000. That's across the entire United States. In order to afford a $420,000 home, you need to make at least $115,000 a year. That's if all of your other expenses are extraordinarily low. So if you think about the high income demand needed for the high median home price in the United States, these Gen Zs and millennials, these largest amount of home buyers in the market today, are needing to get really creative. The one way that they're getting creative is they're focusing on house hacking, right? Which house hacking is where you buy a multi-unit, you live in one unit on the property, and then on the other side, you rent out, and that renter helps pay for a portion or all of your mortgage. Unfortunately, it can be difficult to find multi-unit properties, and it can be frustrating because those multi-unit properties will normally be in a multiple offer situation, and it's really difficult to buy those as a first-time home buyer. So what's happening is millennials and Gen Zs are saying, man, instead of going through all of this trouble to pay above market value for these multi-units, or wait around and find these multi-units, or need to rent out rooms, or need to worry about renting out to a tenant that lives in the unit next to me, they're seeing that as headaches. So what they're choosing to do actually right now is rent. They're like, hey, I can rent, I'm gonna pay less than my mortgage payment would be. I'm not gonna need a roommate, I'm not gonna need to manage another resident, so I'm just gonna rent, right? And as rents across the United States are at an all-time high, but stabilizing where they are, meaning we're not gonna see a dip in that all-time high rent payments, people are choosing to rent, which is great, because what that's doing is that's driving the demand for rent up because interest rates and home prices are so high. So as investors, as rental property buyers, we're just seeing positive notes to continue to buy rental properties and easily be able to get those rental properties rented out at rents that have really never been seen before in that market. So that's what's going on in real estate. Now, what inspiring things did Mr. Warren Buffett have to say? Now, I'm a huge fan of Warren Buffett's. I think he has been genius. He has been investing for, probably 50, 60, 70 years at this point in time. One of the most successful investors ever to live. And some takeaways, or some, key little phrases that he shared, I'll share two of them with you during his live interview the other day, was this. Number one is the number one rule. The first rule of investment is don't lose. Pretty easy to say, right? And the second rule of investment is don't forget the first rule. And that's all the rules there are. If you buy things for far below what they're worth and you buy a group of them, you basically don't lose money. So if you translate that, he's obviously thinking about buying companies or stocks at an undervalued amount, right? The exact same thing is true for real estate, guys, right? If we're buying properties undervalued off market and we're buying, 1, 2, 3, 4, 5 of these things, guess what? We can't lose, right? Because we own a real asset that's insured that over time will greatly appreciate. And another big thing that I took away was market timing. He talked about market timing a lot. And I love that because, right now with high interest rates or what we consider higher prices, everyone's like, is now the right time? Well, listen to this. If I were being asked to participate in a business opportunity, would it make any difference to me whether I bought it on a Tuesday or on a Saturday or an election year or something like that? It's not what a businessman thinks about when he's buying businesses. So why think about that when you're buying investments? Because real estate or stocks are just part of a business, which I love that, right? He's saying, who cares what the weather is outside, right? I'm looking at the numbers. If the numbers make sense, I'm pulling the trigger. Who cares about all these things that I cannot control or all these things that are, could be negative, could be positive. I don't have a crystal ball, so I'm just going to pull the trigger and invest anyways, as long as my numbers make sense. So those are my two biggest takeaways from the interview with Warren Buffett. Hope you enjoy them as much as I do. Go check it out. It's all over the internet. Other than that, guys, as always, happy investing. Have a great week.